Resistance is resistance until it is not, and Bitcoin is currently retesting a major resistance, this being the $31.3 to $32,000 level. Will Bitcoin reject from this level and continue downwards, or is Bitcoin preparing for a move toward the upside? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a fantastic day today. We're here to take a look at Bitcoin on the smaller time frame and on the macro chart, as Bitcoin is currently retesting yet again the 31.3 to 32,000 major horizontal macro resistance, an area of massive liquidity and resistance on the chart that which, if broken, will result in that continuation upwards, and if is rejected from, could result in the start of a move toward the downside. So let's go ahead and dive into it. Now, before we do, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, the economic news, and the relevant news events. No BS, no hype, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram as well. We post on Telegram daily updates, charts, videos, educational posts, news events, everything you need to stay on top of Bitcoin, cryptocurrency, and the relevant economic data on a daily basis. If you're interested in joining our trading channel, which of course is going to be our VIP group chat, we have entries, targets, stop losses for shorts and longs for altcoin, Bitcoin, Ethereum. We post on a daily basis in here with new trading signals. All trading signals, again, come with the entries, come with the targets, come with specific stop losses and justification for the trades. You can see a whole group of trades in here that we do post, all of which, well, most of which do hit our targets. In fact, if you go ahead and take a look at our trading track record for our VIP, over 29 months of data, you can see we have around an 80% win rate, which is absolutely massive. If you're interested in joining the VIP, go ahead and contact me via this message in the free channel. You'll get access to the main chat and of course our group chats, which of course we have all of our traders in here learning, discussing, and trading alongside one another. Let's go ahead guys and get into a video, starting off with the market data. So how are we looking as of today? For July, we are currently up 2.48%, looking pretty strong, looking pretty good. Looking at liquidations, we can see you are down 9.68%. Sitting around 61 million. As per 24-hour volume, we're up 10.31%, sitting at 74 billion. So all in all, not too bad, not a bad start for the week. Moving on to our volatility index, we are looking at our 30-day. Again, not too much happening over here. We are consolidating downwards over here while the price is moving upwards. So we do have a bit of a discrepancy over there. Looking at the 60-day, same kind of thing here. Price is moving upwards and the volatility is moving downwards. A little bit of a discrepancy there once more. Moving into our liquidations, we can see over the 61 million in liquidations. We did see the majority come from shorts upon that rally up to 31.3k. Again, we discussed in yesterday's video that we were likely seeing a bullish consolidation occur within this range, and the probable move was actually one more swing upwards to retest our 31.3 to $32,000 range. We said if we broke above the 30,800 trigger, that would be the trigger for a move into this range. We have now seen that. We saw shorts liquidate. We saw the price of Bitcoin move upwards. The big question is this level now going to act as a major rejection point for Bitcoin, which could push it lower, or are we just going to clean push right through it and continue upwards? We're going to answer that in the video today based on a technical and a structural perspective. Let's go ahead and move into the DXY. For the DXY, we can see we are finding a temporary amount of support around the 50 EMA. Again, these moving averages aren't support lines, but we are finding consolidation around the 50 EMA, again pushing sideways as we have broken upwards and bounced from our lower support at around 102.5. Currently still sitting underneath our downward sloping resistance. We are actually approaching a semi-apex between our horizontal support and our downward sloping resistance, which should make a directional move quite soon. Toward the downside, if we break downward, we're looking for a move to 101.5. This will be bullish for the markets. For the up move, we're looking for a break above the downward trending resistance, which will take us ultimately to 105 to 106. This will be bearish for the markets. Keeping our eye on that in the days to come, particularly since we have a whole variety of economic data coming out within the next few days. If you go over to the free channel, you can find a list of economic data coming out for this month. We put it all in here. We have minute meeting, we have NFP, we have unemployment rate data, inflation data, we have PPI data, and we have retail sales, all of which are relevant and important in predicting the probabilities of interest rate hikes and thus the direct influence that will have on the DXY and the broader market. So check all that out. Looking at the S&P 500, really not much has changed in the last 24 hours. We are still pushing upwards here, rejecting from 4,500. So we do need to break over 4,500 to continue upwards. Ideally, a weekly candle close above this uptrending resistance would be required to invalidate a structure. Until then, the risk return is still in favor of a move toward the downside. Keep that in mind. Same goes for Dow Jones over here, guys. Not going to get into that one too much. Let's go ahead and jump over to Bitcoin. So how are we looking and what is the chart saying in terms of the macro level? I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Why is 32,000 so significant? So as we can see in the chart over here, guys, we had the break over 30,000. We've actually been consolidating now relatively well, and for around about 10 or so days, I believe, around 10 or 12 days now, above 30,000. So 30,000 so far is providing a decent amount of support and yet to actually be confirmed as a high time frame support. So remember, for it to be confirmed as a high time frame support, we need to remain above it for a monthly candle. We have broken out of the 30,000 resistance. We've moved into a high time frame macro uptrend, but to confirm that 30,000 as support, we need to remain above it now for another month candle to validate that. So we are still looking for a monthly close now above 30,000 again to not only validate that support level, but again confirm the continuation upwards. So far we have one of the two, and that is awesome to see. Looking at the next major resistance, it is going to be this $32,000 to $31.3 thousand range. If we take a look at our VRPV on the right hand side and we drag our resistance across, what we can see is immediately after breaking above this level, we see a significant drop off in that VRPV until around 38 to 39-ish thousand, maybe pushing up to 40,000. Until around this 38 to 40,000 range, which we'll go ahead and draw in over here. Okay, let's pop that in. We can see a huge drop in that VRPV, indicating the range between 32 to 38 is a a low resistance range. Okay, in a low resistance range, it means historically we have less orders and therefore we are more likely to push through this range relatively quickly, provided we have the volume required. So if we take a look at this level over here, particularly 38, what we saw is when we lost 38, we saw a cataclysmic drop toward the downside. This is a low resistance range. As we can see, we retested that area once more as a resistance numerous times before rejecting and pushing back down. That area in which we rejected from was in fact 31.3 to 32,000. That area now has a historical and horizontal implication on the charts and the current price action. It is acting as an area of liquidity in an area of resistance. It is a supply zone, so it could be an area in which the price rejects from, or if breaks up, will confirm a continuation for the price. We are in this decision zone right now at this resistance for Bitcoin. So if we zoom out once more back to our original chart, we can see that we have always had these levels identified on the chart for quite some time. In fact, we've been talking about these biases all the way back ever since probably around late February, early March. And we've said the entire time, in terms of our daily chart, for us to be in this macro bullish trend, we need to clear this 32,000 level. You can see right over here, we've had that arrow from 32,000. The same goes right now, guys. For us to enter this next phase upwards, this next move upwards for Bitcoin, we do need to get above this higher time frame resistance right over here to continue upwards. So we are looking for that move, and that is what we expect to occur if we get the validations that we are looking for. We'll discuss the validations in one moment. Looking at the higher time frame once more, guys, what we can see is this next chunk of support, which is at 28 to 30,000 level, is still providing us support. And while we remain above that, we remain in this higher time frame uptrend. For the uptrend to be lost, we need to lose that same area of which we broke out before, which is going to be this level over here, 24.4. If 24.4 to 25K is lost, we will move from a weekly bullish trend into a weekly bearish trend. If $28,000 is lost, we move from a uptrend into a daily downtrend. So 30,000 to 28,000 is that daily downtrend level. We lose bullish weekly strength as we push under 30,000, and that bullish weekly trend is officially lost under 25 to 24.4. While we remain above 30,000, the probabilities in favor of a move upwards are higher than a move downward. But this is the interesting thing. Although the probabilities are in favor of a move upwards as opposed to downwards, the risk return is in favor of a move downwards than upwards. If we look at our risk return, we have a very tight invalidation just above 32,000, and we have a whole lot of potential returns toward the downside, all the way down to 24.4, if so be it. So the risk return is in favor of downwards as opposed to upwards, but the probabilities still remain in the move toward the upside. Let's go ahead and jump into the smaller time frame price action, because there is a fair bit I want to discuss. So first and foremost, let's discuss Bitcoin from a structural perspective on the daily, and then move into the smaller time frame. So what we saw historically over here, guys, we saw a nice descending channel formation, which we broke out of. A lot of people are saying we had a falling wedge. I still believe we had a descending channel. In fact, we actually validated that we had a descending channel. All we need is 2 points on one side, and we need 3 points on the other side. So our 3 points, we've got that descending channel. We had that breakout. If we take a measured move from this, we can see our measured move applied from the width of that channel to the breakout point exactly took us into this resistance range we were looking for. So around $30,000 right over here, a perfect breakout target into that box. We have since pushed upwards a little bit more into this 32,000 to 33,000 resistance, and you can see right now we are actually currently retesting that level once more. Let's go ahead and zoom out a little bit further. What we can see is our weekly uptrend. This trend line is the trend line, or the exact representation of the trend we have been in ever since around the start of January and confirmed early March. This represents our weekly uptrend, and in fact, the entirety of the move upwards has been supported by this weekly uptrend. If this level happens to be lost, we will then enter a weekly downtrend that could take us lower. So we are still watching that level, a very key level that we do remain above. Now, obviously, we are very, very far away from retest that level. It's a whole, 10 or so, maybe 15% away. So we are not at any immediate threat or even really need to talk about it too much right now, but it's something to keep in mind in the future. If we do eventually retest that, that will be something to look at for a rejection and continuation downwards, or even a possible bounce. Eventually that level should be retested, provided this angle continues upwards. You know, it'd be very, very bold to assume that eventually we won't retest that level. At some point we will be retesting that trend line, and whenever that may be, whether it be now or in 3 months time, that is a key level to be watching out for in terms of a diagonal support and a potential trigger for a flip in the overall weekly trend. But let's go ahead and take a look at a smaller time frame. So what are we seeing here? we are seeing that breakout that did occur yesterday. We said we were looking at a breakout of around 30,800 for a continuation upwards. Awesome. We saw that. We can tick that off. We can assume that that move has actually now completed. If we take a look at the technical levels, we can see our volume delta, which is over here, is suggesting we had a high point over here and we are currently having a low point. This is suggesting that overall volume in this move compared to here is lower and volume is dropping. This is actually a sign of weakness. It shows that we haven't got the strength actually required to break through this level, as we have lower volume in this move as opposed to this move. Our volume delta is lower. That actually is a first sign of potential weakness and could be signaling a rejection or a move toward the downside is actually coming soon. I'd be very, very cautious about that. I'll be watching that as we go forward. Another thing I want to bring up is the RSI. If we take a look at the relative strength index over here, we can see, as opposed to our local high that we created on that first breakout on the 4 hour, right over here, we can see we have actually made a lower high over here on this recent breakout, once more signaling a possible area of weakness. This area is going to be acting as a resistance. All of these technical levels and structural levels do go to suggest that 31,000 to 32,000 is a major area of resistance. And even if we push up into here, you're looking for shorts the entire time, provided we do not break above 32. If we get above 32, that is when the price will continue upwards. That is when we get the confirmation of a move higher. What we could potentially see, guys, is that a move upwards, a liquidity wick, and a grab down. The reason why I would say we could still see one more move upwards would be because if we take the measured move of this horizontal channel and we apply that measured move to the breakout point, it would actually suggest we could see one move upwards to around about 32,200, or if we apply it to our trigger point, which is again 30,800, it will suggest a move upwards to exactly 32,000. So in terms of our structural levels, we do still have some degree of upside move left. In terms of our technical levels, we are experiencing weakness here at this resistance level. So if you were to take shorts here, I would keep those shorts very tight, because if we do break back into this range, it is likely we actually push upwards to retest the upper proportion of this resistance range, maybe between 31,700 to 32,000. So watching out for that on the smaller time frame. Now, if we do break back down, we'll be looking for a continuation, right? At the moment, this area is now going to be a support level, but it is still a trigger. It flipped from a bullish trigger from the downside up to a bearish trigger from the upside down. So now if we do break under it again, that is going to be a trigger for a potential collapse back towards our $30,000 support. That will be classified as deviation, the deviation being so because we had lower volume, we had lower momentum, and thus that was a fake out into our liquidity grab, into our resistance range. We break back below, we enter this move toward the downside, and we're looking for targets again along this higher time frame support at 30,000. If $30,000 is lost, we then expect a move lower. If we're looking at our VRPV range, we can see immediately after we lose around 30,000 to 29.8, we can see we drop off significantly to around 29,000. Meaning we have a strong chunk of support at around 29,000. Moving lower, we can see historical levels of liquidity at around 28.4 and more importantly, 27.5. I said this in yesterday's video and I will say it again. The most important level we do remain above right now for Bitcoin is going to be this 28.4K level. It doesn't matter all that much if we reject from this range and push all the way down, but it does matter if we close a weekly candle below 28.4. The reason being, if we go to our higher time frame chart, specifically the weekly chart right over here, we bring up our Gaussian channel, we can see that the weekly upper band of the Gaussian channel lines up for around 28.45, just above 28.45. By the time it comes down, it would have flattened out to around 28.45. If we look at the weekly chart, historically, every time we break from this lower red, being our bear market low, through the Gaussian channel, being a flip in the macro trend on the weekly chart, which we have now had, we have had that bullish flip, we don't actually break back below it until only after we have retested the high of the dead cat bounce from the prior cycle, that being the dotted trend line. Sorry, we took the wrong thing out over here, the dotted trend line. So we look at this dotted trend line over here, we look at the dotted trend line over here, we look at the dotted trend line over here, and we apply that to our Gaussian channel chart. We can show you an example. If we look at this instance back in 2016, we had that breakout. And I want you to look at the left-hand side of the chart as well. You can see the dotted line on my crosshair right over here, okay? We had that breakout. We stayed above the Gaussian channel. Awesome. We came up and we retested. In the next scenario, which was 2017-18, we actually saw a similar thing. We broke above the Gaussian channel, we came back down and retested it, and then we went upwards to retest that dotted trend line, and only after that, we crashed back into the Gaussian channel. So if we're going off historical price action and going off the Gaussian channel itself, we wouldn't want to see a weekly candle break back underneath the Gaussian channel until at least this upper level of liquidity has been grabbed at 48,000, in which we could then come back down and reject and then continue upwards later. So the key level for us to remain above is still going to be 28.4 on the smaller time frame. If we do reject down, this will be an area in which we are looking for to re-enter, to take longs again in this range for Bitcoin. This will be worst case scenario. Best case scenario, of course, is Bitcoin ignores all this. It breaks the 32,000 and continues upwards. But if we're looking at our technical levels, guys, we do see signs of weakness at this range. Let's go back to the daily chart and run a technical analysis at this level and discuss how the charts are looking, and then we'll wrap up the video. So let's go ahead and bring up the RSI, we'll bring up the CVD again, and maybe bring up a few more indicators as we go. So let's take a look. As we can see, we have got, of course, a high point over here, the RSI. We have our price trending upwards. Nice to see. We actually broke above that resistance over here, which is awesome to see. If we draw that same point on the RSI, we can see we are actually still kind of struggling with that level. We would like to see a little bit of break upwards, but again, like I said, we are approaching this 31,300 resistance. We do need to see this price break higher to actually validate that next move upwards. It's normal to see momentum fall off. It is normal to see volatility dry up. It is normal to see volume dry up as we approach areas of resistance. It does not mean we are going to reject, but it does signify we are at an area of resistance. We're looking at the higher time frames, such as the 3-day chart. We can see that momentum has flipped positive on the 3-day. We can see the market OB has crossed over that 0-point line. We have the blue waves pushing upwards. We have positive money flow. The price is moving upwards. However, we can see the money flow is dropping a little bit, indicating an area of slight resistance, again, which is expected as we are in a huge liquidity zone. If this were happening in the middle of a range, this would be a warning sign. This would be very, very bad. But since it is expected at this resistance, it is completely okay. It is normal to see. We are not having any problems with it. What we're looking at right now is looking at the structural levels. We're looking for a break above or clear signs of rejections for then the next move to develop, and then these technical indicators will catch up. So when we're at these horizontal areas of structural resistance, you have to put more emphasis on the structural levels of liquidity than you would on the lagging indicators themselves. Even momentum in these scenarios are slightly lagging. Anyway, guys, I'm going to leave the video there. Thanks for watching. Looking at the smaller time frame, keep your eyes on it. Expect a rejection from 31.3K in the smaller time frame. If you're taking shorts, now would be the time to take some. Keep your stop losses tight, because if we break back above 31,000, we still do have this upside range that we could challenge. We could potentially still push to 32. Zooming out, 31.3 to 32 is a major resistance. I wouldn't expect the price to bust right through it right away. Expect the area to be a possible rejection zone on a higher time frame. If we reject from this level and break back below 30,800, expect a move downward. Meaning, if this area turns back to resistance, expect a move downwards until we reclaim it again. Okay, so the bias flips on a smaller time frame. If we break above 32,000, however, that will be quite bullish, and we can expect the higher time frame trend to eventually continue upwards. It might take some time, however. So right now, if you're looking at trend biases, if you're looking at how you should be viewing the market, if we drop below 30,800, you should be short-term bearish. Right now, you should be neutral with a slight bearish leaning because we are at resistance. Above 31,300, you should be short-term bullish for a move upwards, but weekly and daily bearish. Above 32,000, you can be higher time frame bullish. That is what you're looking at. That is what I'm looking like. Thank you for watching, and I'll catch you guys in the next one. Cheers.